Stavros Tousios for M4Markets. We're gonna have a quick look on dollar yen and also Kiwi today. Divergences, and it's important to see where we are. In the medium term on euro dollar, on dollar yen, excuse me, we have actually come all the way up from 127.20 to yesterday reaching 149.50 or so, which happens to be like a 7-month high or so. We have, and as we probably anticipated and talked about, a triangle pattern over here. And triangles typically break to the direction of the predominant trend, which is to the upside. And they do that, and we have the measured move that we need to take into account from the breakout point. In this case, from here down there. So we're going to use the Fibonacci extension tool and towards the breakout point, which happens to be around that level over here. I would probably say around 140. And that is 142.42, which happens to be very close to the 61.8 Fibonacci retracement of the medium-term leg to the upside. We have two divergences actually popping right now. And the question is, when and if we do go higher, because we have a very strong resistance, trend line resistance to that we are facing here. The question is, if we go higher, are we going to invalidate that signal, or are we going to crawl higher with momentum waning? Momentum to that high looks quite impulsive, and nothing like indicates that it's crawling higher. However, because this is the first move to the upside, typically that's the impulse that we see after the correction, right? So this is like 1, 2, and 3. Typically we said markets do 5s, so 4 and 5 would be something that I will be potentially expecting to happen. And from there, and especially if that signal still defends the sort of bias to the downside with bearish divergence, then that would support the case for at least a short-term correction, which of course will give us then, based on what happens, a bit more insight about what we can expect moving forward. When we're looking at Kiwi, the medium-term leg also gave us a correction down to the 50%. And that was a new low, by the way. Yes, we did fail to reach the bottom, but it doesn't really matter. We have had a very tiny divergence here, which drove us higher. And after a correction to the 50%, and we didn't lose the 50%, it was just a breakout. And we started moving up. And as we move up, we are now currently at overbought territories. But at the same time, if you look at these two peaks and these two peaks on the RSI, you can see there is like a hidden bearish divergence on the charts. We are indeed above the 38, okay, at 61.50 or so. And what I think might be happening, because we said markets move in 5s, right? Maybe we're due one more wave to the upside without necessarily reaching the top, so that we actually see that turning into a second divergence signal. Okay, typically you get the divergences popping at 5th waves. So if this is 1, 2, and 3, and we're currently in the 4th wave, then expect the move to the upside with low momentum would indicate this is a terminal wave, which would then suggest we're either going to turn lower for a correction and further continuation, or break lower and have an attempt at the 61.8 Fibonacci once, of course, we manage, and if we manage to retake 60.24, which is the 50 Fibonacci retracement of that leg. And so far we have extended up to the 1618, which makes a perfect wave of 4, and the 100 typically is where wave 4 finishes, the 30, sorry. And so maybe we're going to see some sort of upside in the short term, okay, to take out the 63, which is, by the way, now a cluster. So to me, this looks like a pretty attractive zone to start looking for potential signals that indicate some sort of reversal, even for the short term.